morning, good morning, good morning. Good morning. Good morning, traders. Welcome to another episode of Market Morning. I'm your host, Jay Reed. Man, we got a lot going on in the markets this morning. In today's Reed Report, we're going to break down the biggest market shocks of the day, including the worst gold sell-off in over a decade. Netflix surprise tax hit, and the meme-fueled madness behind Beyond Meat, 600% rally. So, as always, man, we're going to get right into it. First of all, this stream is intended for entertainment and educational purposes only. The information within is not to be considered financial advice. I'm not a financial advisor, so make sure you consult with an actual financial advisor before you make any financial decisions. Again, we got music today by Asylum Audio Labs. We're going to kind of keep it in the background today. I don't know. I may cut it off. We'll see how it goes. But yeah, man, good morning. Good morning. So we're going to get right into it. As always, giving you a market snapshot just so you see what the lay of the land is. The S&P 500 is up 0.1%. Gold, like I said, gold's down to 4,000. I mean, it's shocking that we say that's bad, but the losses have extended there. Crude oil is up 1.2%. I'm sure you guys have been enjoying the price of the pump. I think I got gas for $2.75 yesterday. So shout out to whoever's bringing that price down. But it does appear to be back on the rise. The Hang Seng is down about a point. Asia's still shaky, and the stocks Europe 600 is in flatline mode. So the markets are cautious this morning. But like we said, oil is creeping back up, and gold just had its worst single day drop in over 12 years. Meanwhile, earnings are driving stock specific drama. So, and just we'll get right into the news. We don't want to. Hold on 1 second here. We don't want to claim any offers. What is it going on here? I don't want any offers, guys. Okay, yeah, we'll go right into the news. Like I said, gold miners tank. Gold extended its route in a volatile pullback from the record price surge. The Van Eck Gold Miners ETF is down 9%. Like I said, it's the biggest sell-off since the COVID crash. Newmount, who we talked about, it's big part of our defense. And Agnico and Barrick all hit hard as gold's safe haven narrative takes damage. And it's a reminder, miners and gold itself, miners does not equal gold itself. So, these guys that are mining, they don't actually have the gold in hand. So they all got hit hard, and they way outpaced. They got hit hard, but if you really look at it, those guys have have extremely outpaced the rise of actual gold. So I guess it was bound to happen, but just real quick on this article, gold extended losses in a choppy session after suffering the worst rout in over 12 years on Tuesday, and concerns its rally had run too far, too fast. Spot prices on gold slid to $40.80 an ounce as European trading got underway after swing, and that was earlier this morning. The pullback brought an abrupt halt to rapid advances that have been underway since mid-August, with gold still up. It's still up about 55%. So we can't be too mad at that. Stocks U.S. futures struggle as gold rout deepens. U.S. This is affecting U.S. futures because it creates like a murky landscape. For Wall Street. So, like I said, we'll have to see if gold is still a part of our defense. Right now, they're getting ran through. Surprise inflation read from the UK. Traders see the Bank of England cut this year after inflation holds steady. The September CPI held steady, and it's not what markets expected, the consumer price index. So traders now betting on a Bank of England rate cut before the end of the year, and pound and bond yields fell because of that. The Eurozone deflationary fears are back. Like I said, they held steady after food bills fell for the first time in months. So, with consumer prices rising 3.8% from a year earlier. The Office of National Statistics said upward pressure from auto fuel prices was offset by falls in live music prices and cheaper food bills. So I guess people aren't, they're allocating their funds to stuff that's more, I guess, survival type tactics. I don't know. The futures may ease concerns about lingering price pressures and market bets of a Bank of England interest rate cut before the end of the year have increased, with the odds now around 70%. So, seems like the rest of the world is cutting rates. I think the U.S. is on that track as well. So, but that brings in, some inflation, deflationary stuff in the play as well. So, continue to monitor the inflation over there because it will hit us as well. Netflix sinks 7.2%. This was after a Q3 beat, but Brazil tax dispute spoiled the vibes. It ruined the vibes. You know what I'm saying? Next, Netflix said a tax dispute with Brazil cut into the third quarter earnings, marrying results that otherwise fell in line with Wall Street estimates. So, they beat, they fell in line with what Wall Street wanted, but they got this lingering tax issue going on over in Brazil. It's sharply down pre-market. I know this says up 0.23%. I think that was on yesterday's anticipation of the what's it called? Of the earnings release. So let me see. Yeah, I'll just go quickly to the charts real quick. And good thing that I checked that because the chart's not up. Sorry about that. There we go. As you can see, they're down pretty sharply pre-market. They had a double top kind of heading towards that target. So we'll go back to the charts in a little bit. But continue to watch Netflix and see what they do. We have Tesla reporting tonight. Profit is expected to drop 25%. So is Tesla next? Investors, but I think right now investors don't seem to care. The valuation is still sky high at 195 times forward earnings, which is ridiculous. I've heard before that Tesla hasn't made a dime yet. Do your own research on that, but I just think they're all debt or something like that, and it's. At one point, they were the richest company, kind of like Apple and stuff like that. So we'll see how that plays out. Tesla's narrative, that they're giving equals AI plus robotics. It's not EVs anymore. They're getting into, the new wave. So the company's stock price has more than doubled in the past 12 months, with its market valuation reaching dizzying highs. Like I said, 195 times expected earnings in the next 12 months. Tesla's valuation is head and shoulders above its peers, with its AI visions years away from generating sales. So, yet I've heard before that they don't really. Elon said himself that he expects to have a terrible 2025, a okay 26, and a great 27. So we'll see if that plays out. And last but not least in the news, I won't say last, but Anthropic, the AI powered deals incoming. Anthropic is talking with Google on a multi-billion-dollar compute deal. Anthropic is in discussions with Google about a deal for cloud computing services valued in the high tens of billions of dollars. The deal would allow Anthropic to use Google's tensor processing units to accelerate machine learning workloads. This is according to people familiar with the matter. Anthropic and Google declined to comment, and talks are in their early stages with details that could change. This all could change, but Alphabet, I know it says down, that was off of yesterday's, but this morning they are up 1.2%. So, AI infrastructure plays back in focus. And I think, AI is going to be the theme. I know this was a China week, not too much news from China, that area of the world today. So, take note of that. The AI is back in the focus. So that's probably going to be the theme next week. Just some other quick things I seen in the news. Cable giant Charter lays off 12,000 workers. So this is kind of continuing and they're up 0.4% off of this news. But it's just over 1% of their workforce, which is about 95,000. So not a huge hit, but people are continuing to lose their jobs in this AI-driven world. So let's go ahead and go right into the stock movers of today. Again, the big news surprise. Hope you got into it. I didn't see it on my radar until late yesterday. And I was hanging out with some of my buddies online, and I'm not gonna take credit for this trade at all. They put me on to this, and I got in at 320. It was probably a risky hold overnight, but those are the ones that pay off, man. Right now it's coming in pre-market, and this is Beyond Meat. Sorry, Beyond Meat. The ticker is BYND. They are up 100% overnight. 94%, and this is meme stock madness continued. Some say it may be a short squeeze or something going on, because they were in jeopardy of being delisted. They were under $1. I think last Thursday, they were like 50 cents or something like that. So yeah, last Thursday they were on the 17th of October. That's Friday. They were coming in the 50 cents range. So 600% in less than a week, man, is pretty dang on good. So I missed out on that. I only got in yesterday, I think at 320. So, but yeah, it's continuing to run. I don't know what it'll do when market opens, so that's why I'm trying to get off of here. But for it in, next we have Intuitive Surgical, ISRG. They are up 16%, and this is as the Da Vinci system shines, and they beat on revenue. You have to research what the Da Vinci system is. I don't quite know. I have to do a little bit more research on that. I'm not gonna just dive into this company, but they are up pre-market as well, 16%. Then we got DraftKings, everybody gambling. Everybody gambling. DraftKings is up 5%. They acquired the predictive firm Railbird. Never used those guys. Not really a fan of predictive websites. DraftKings is launching DraftKings predictions. something doesn't sit right with me when you have the gambling site also doing predictions. I'm gonna stay away from that, but don't take my advice for it, because I don't want to ruin any relationships affiliate wise with those guys later. So that's just me. I like to use my own predictions. But anyways, a mobile app for trading contracts on event outcomes and finance culture. And so this is something. I'm sorry, I take that. I digress. This is getting more into the like just betting on regular everyday events besides sports, outside of sports. So this is probably good for them. It's going to create more revenue, I'm assuming. So that's what has their stock up. Beauty, L'Oreal. Let me find their what is their ticker? L'Oreal. Sorry, bear with me. I can't find their ticker because I don't know it. We'll just look at the European stock. They're down, and they're open. That's why it's showing on here. They are down 8%. Beauty sales missed their expectations. People don't really care about beauty anymore, especially this kind of beauty, I guess. So, stay away from those guys. Texas Instruments, TX. And I used to have me a Texas Instrument calculator, and we used to play. We didn't use it for calculating. We used to put games on it, like all the nerdy guys with program games, which I should have been on that. Kicking myself right now for that. But weak guidance due to slower chip demand, and they missed on earnings by 0.5 point. They beat revenue, so isn't that that's not surprising considering things cost more and less to produce. So. But they are down 8% off of the weak guidance going forward. So that's all I have for the movers and shakers. I'm sure there's more. If you got any, just drop them in the comments below, and we'll check them out. But let's get into our weekly playbook. Let's check the progress report on sectors that we hit. Since it's midweek, we want to make sure that we're on the right track. AI infrastructure, like I said, and semis, semiconductors. Google wasn't in our playbook, but the Mag 7 should always be in your playbook, regardless if I talk about it or not. They are up on the Anthropic deal. So you want to continue to monitor guys in this sector and just start running those plays. Then you got Texas Instruments. Even though they are down sharply, slowly divergence in chip land, showing divergence in the chip land. So, this may be somebody you want to take out. I didn't mention them, but you probably want to take these guys out unless they have something on the horizon. They're down sharply, because they're not. People are considering them unable to compete. And then we never miss with Nvidia. It's on a downtrend, slight downtrend right now, but with those guys, that's just opportunities to buy. They've been up under the 200 EMA for a while, slowly creeping back up to it. So eventually it'll become what's the term I'm looking for? I can't think of it, but basically they will be a good value buy. And then AMD, of course, we've been running this play like a halfback dive for a while. They're trending upwards. They hit that double top, but they've broken out of that and they're kind of flagging or going sideways. So we probably look for a good extension on this sometime soon. Any news? Momentum is still alive. Any news is going to push that up. Speculative growth meme stocks. These are never really these are like gadget plays in your offense, but if you keep your ear to the street, like I won't go back into Beyond Meat, but if you keep your ear to the street, you know what I'm saying, like every once in a while you'll come up with these gadget plays that give you 600% returns or 100% return overnight. So that's why it's always important to, first of all, like and subscribe and hit that notification bell so you know when I go live and I put out news. Follow me on all the platforms. You can see that link in the description below to my link tree. You'll have complete access to what I'm doing, but also just always be searching, and if you're keep in mind though, if you're like a risky guy and you always are running these gadget plays, it may not end pretty for you. So that's why you got to always have some good solid plays, medical robotics and tech. Like I said, we have ISRG. That's someone that's that we've recently talked about. They're in the move today. They're leading the charge in surgical AI gains. Eventually, that's going to be a actual thing where robots are doing surgeries in as opposed to humans. And if you know anything about that has something to do with the latency, basically, like if I make a move, does the computer or hand make the move at the same time, and then programming it and all that good stuff. So our weekly score on offense, we're up 3-2, still strong, but cracks showing in traditional chip makers like I said, like Texas Instruments and stuff like that. So you probably want to consolidate if you're running offensive plays in the AI infrastructure and semiconductors. Probably want to just stick with the big dogs. Defensive plays, man. One of my main defensive plays, Tampa 2, cover 2, whatever you want to call it. Gold miners are wrecked. You got the Van Eck. We'll just kind of focus on the Van Eck ETF. No, I meant to go to the gold miner one. Sorry, Van Eck gold miners ETF. They're getting wrecked. They're down pre-market as well. So they've dropped 9%. Gold losing its aura as a safe haven. That's after an overextended rally. Like they were just, you kind of anticipate that, anticipate that play is not going to work forever, or at least continuously. So we might want to take a break from that. We're down on that play as well. And healthcare and diagnostics, you got Thermo, Pfizer. We talked about these guys. We added them, I think, yesterday. They actually report today, so they are a watch list name for strong stability. Actually, they reported already, and they beat earnings by 5% and revenue by 1.87%, and they are up big pre-market. So that was a good defensive play. You got Pfizer, of course. Regardless of what you think about Pfizer, they're not going anywhere, and they are up as well, or at least trending up pre-market. And you got Whole Logic. Whole Logic is on the NASDAQ, and they are up pre-market as well. They're quietly staying green, and this is amidst all of the chaos and noise going on. And last but not least, utilities. They're flat action on most tickers. What do you got? PEE. I'm not gonna go into those guys. Check out my last streams. But those guys are, they're not losing ground, but not gaining ground either. So nice steady, doing nothing play. So defense, we're 1-2 right now. Because that's only because utilities aren't doing anything. Gold collapse is dragging the group down, but healthcare keeping things afloat. So, man, that's all I got today, man. It's been going faster and faster. Like I said, I'm trying to get you guys out of here. And where we at right now? I can't see the timer. We're at I don't know the time, but it definitely feels short today. So my final thoughts: the markets are leaning stock specific this week. It's not like an overall, not a macro look. They're specific targets people are going after. So pay attention to earnings, not headlines. Headlines tend to be misleading. That's it, man. Smash that like button, sub to the channel, and hit the bell tomorrow for tomorrow's update. Make sure you check out my affiliate links down below. We've added some new ones. Of course, we got BTCC for all my risky guys that like risk in the crypto market. Trade up to 500x. If you want to know how to chart, the chart that I use, of course, is TradingView. But I also have a link in the description below. TradingView is going to be coming up with some good promos here for Black Friday. So get ready for that. If you haven't already had an account, start you a free trial. I do have the ultimate edition, but try it out, man, and stay tuned for those discounts coming. So that's all I have for today, man. It's been a pleasure. This has been your Read Report for the day, and I'm out. Peace.